Ladies and gentlemen, good day and welcome to Tinna Rubber and Infrastructure Limited Q1 FY24 earnings conference call. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Ms. Purvangi Jain from Valorum Advisors. Thank you, and over to you, Ms. Jain.
Good afternoon, everyone, and a warm welcome to you all. My name is Purvangi Jain from Valorum Advisors. We represent the investor relations of Tinna Rubber and Infrastructure Limited. On behalf of the company, I would like to thank you all for participating in the company's earnings call for the first quarter of the financial year 2024. Before we begin, a quick cautionary statement. Some of the statements made in today's Concall may be forward-looking in nature. Such forward-looking statements are subject to risk and uncertainties, which could cause actual results to differ from those anticipated. Such statements are based on management's beliefs as well as assumptions made by and information currently available to the management. Audiences are cautioned not to place any undue reliance on these forward-looking statements in making any investment decisions. The purpose of today's earnings conference call is purely to educate and bring awareness about the company's fundamental business and the financial quarter under review. Now, I would like you to introduce the management participating with us in today's earnings call and hand it over to them for opening remarks. We have with us Mr. Gaurav Sekhri, Joint Managing Director, Mr. Subodh Kumar Sharma, Director and Chief Operating Officer, and Mr. Ravindra Chabra, Chief Financial Officer. Without any further delay, I request Mr. Gaurav Sekhri to start with his opening remarks. Thank you.
Thank you, Purvangi, and good afternoon, everyone. It's a pleasure to welcome you all to our earnings conference call for the first quarter of financial year 24. Let me start by giving a brief overview of the company, after which Subodh, our CEO, will take over and give details about the financial performance. Tinna Group was incorporated in 1977, and today we are the largest end-of-life tire recyclers in the country and amongst global leaders in manufacturing of recycled rubber materials. We are a prime example of the benefits of a circular economy and a one-stop shop that caters to the entire gamut of recycled rubber applications. Our company manufactures high-quality products from recycling, end-of-life, truck and bus radial tires primarily, and our recycled rubber material goes into all rubber products and in various sectors. We classify them as follows: the infrastructure segment, which caters to the road construction applications; the industrial segment, which is in manufacturing of products like tires and conveyor belts, industrial rubber hoses, etc. The consumer sector, which includes products like rubber mats, gym tiles, and sports surfaces. We recover approximately 99% of the materials from tires with almost zero wastage. The company is a pioneer and the largest manufacturer of crumb rubber modifiers and probably the only company in the world to produce micronized rubber powder of a very fine mesh size of 170 in ambient grinding conditions. We have 4 plants in India at all strategic locations. We have also recently set up a plant in Oman, which is our first overseas venture. We have commenced trial production in Oman in mid-July, and we expect to fully commission the plant during this month. Also to add, I am pleased to inform you that we have commenced work to build a new plant at Varle in Maharashtra. This will increase our tire crushing capacity by 60% and add approximately 60,000 tons capacity to us. We have already acquired land and work has started on the site. Also, we have placed orders for machinery to manufacture thermoplastic elastomers at our existing plant in Panipat with a capacity of 6,000 tons per annum. By getting into TPE, we intend to increase the total addressable market and increase applications for our recycled rubber materials. Both projects are expected to commence production by the fourth quarter of FY24. Lastly, in corporate updates, we have doubled our authorized share capital to 20 crores from the previous amount of 10 crores. We are also issuing ESOPs to our key management personnel. I am delighted to inform that the board has recommended issue of bonus shares in the ratio of 1:1, subject to the approval of our shareholders. I would now like to invite our CEO, Subodh, who will give you more details about the financial performance and the operational highlights for the quarter. Over to you, Subodh.
Thank you, Gauravji, and good afternoon, everyone. So let me first brief you on the financial performance for the first quarter of FY24. The operational revenue stood at approximately rupees 81 crores, which declined by 2% year-on-year, primarily due to a sharp decline in net sales realization by 18% year-on-year basis, which was partially offset by healthy volume growth of 20% year-on-year. EBITDA was reported at approximately rupees 12 crores, which grew marginally by 2.6% year-on-year basis, and the EBITDA margin stood at 14.53%. Net profit after tax was reported at rupees 7 crores, which grew by 16% year-on-year, and the PAT margin was reported at 8.82%. Talking about the sector-wise performance, revenues from the infrastructure sector contributed around 41 crores, which declined by 5% year-on-year. The company secured a 2-year contract for the supply of crumb rubber modifier from Indian Oil Corporation Limited, worth INR 107 crores. Also, Ministry of Environment has issued a landmark advisory advocating the usage of recycled waste material on the road. This will impact the further sales growth in the infrastructure sector. The company commenced export to some of the largest multinational tire companies, and as you know, in the previous calls we have covered, the stabilizing the recycled rubber material usage in the tire sector. It's an ongoing process. It grows with the time. Regarding export, the prevailing economic misbalance in the European market has impacted export sales. Consumer sales, specifically to sports stuff, gym mats, rubber tiles, volume-wise, it has doubled almost in Q1 FY24 on YOY basis. Our steel sector revenue stood at rupees 13 crores, representing a growth of 12% YOY basis. With that, now we can open the floor to the question and answer session. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. The first question is from the line of Prachi Sharma from Ace Capital Partners. Please go ahead.
Hello.
Go ahead.
Yes, hi. Yeah,
Yes, sir. I just have 2 questions. Can you let me know the margin from road sector versus the margin from reclaimed rubber? And the second is sales from the road sector that comes from the refinery versus the road contractor.
It's gross. So both you want to answer the second part of the question, which is she would like, how I've understood, a bifurcation of sales between what is it to IOC and how much is it directly to road contractors.
So the sale, what we have highlighted here is the gross sale, what we supply to entire infrastructure companies as well as to the refineries.
Okay.
Yeah, I think I can, I can cover what you asked for.
Okay, sir. If you can answer the first question.
We have, ma'am, we always give our consolidated EBITDA margins, and we do not give sector-wise EBITDA margins because we think that information is sensitive to the company. So we don't disclose that.
All right, sir. No problem. I will get back in the queue. Thank you.
Thank you. Next question is from the line of Dipesh Sancheti from Mania Finance. Please go ahead.
Yeah, hi. Am I audible?
Yes, Dipesh. Please go ahead.
Hi. Just wanted to understand what the expansion plans which the company has put. How much is the capex for the individual expansion plans?
So the capex figure, Dipesh, for the Varli expansion is approximately 38 to 40 crores. For the thermoplastic elastomer project is around 3 crores. And the Oman setup will be around, we've already invested 11 crores. I think we will probably put in another 2 to 3 crores.
Now this includes the land also, right? At Varli?
Yes, it does.
Okay. And I just wanted to understand the total net sales expansion, net sales growth we see is 150 crores from all these projects approximately. The expansion plans will completely be an addition to the existing revenues, or will they replace the particular set of revenues?
No, this is pure addition because, and I can explain that further for you. The Varle project is being set up for processing of PCR tires, passenger car radials, and I think you may be familiar that today our business is maybe 80-85% of is TBR recycling, which is truck bus radial. So this will be extra because we'll be processing a new kind of tires. Regarding TPE, that's a whole new opportunity where we are actually finding ways to include use of recycled rubber into plastic materials, which is an ocean. So we are expanding the total addressable market size. So that is also additional. And Oman is, of course, our overseas venture where, we are capturing tires at origin and we'll be processing there, and that will also add to the existing business.
Great. Thank you so much. And first, congratulations on the great set of numbers, and thank you for the bonus.
Thank you so much. Thank you for your interest in our company.
Thank you. Next question is from the line of Sunil Jain from Nirmal Bang Securities. Please go ahead.
Yeah, thank you for giving me this opportunity. So my question relates to there is some trading business in this. So can you bifurcate or indicate how much margin we may be doing the trading business so we can get your core gross margins?
Trading is 2 to 5%.
Yeah, in the trading portion, we are doing a bit of trading business. That's a purely opportunity business wherein, the 100% transaction on cash and carry business. So wherein we are locking approx 1 to 2% margin in the trading activity, and this is just to keep, the customer aligned with, our existing road infrastructure business. So that's a pure opportunity and cash and carry business with 1 to 2% of margin.
And sir, this IOC business has reached to its full scale, means there is a big turnover for 2-year perspective. So proportionate revenue has reached, or it will take some time?
No, actually the LOI by Indian Oil was issued somewhere in the mid of April, and then rest of the formalities we completed. So that yet to kick off actually, and somehow, this year the monsoon also has knocked the door little early. So we are hoping, this everything will start adding to the top line as well as bottom line from the Q3. That's what we feel.
And this Oman project, which was, you said that will be starting to give revenue from Q2. So it will be step up, or the full potential revenue can start from the initial stage itself?
See, this is Gaurav here, sir. I'll reply to your question relating to Oman. So the plant was started about 15 days ago. In fact, I was in Oman just a few days ago, and it's looking very good. We expect to run at around maybe 50 to 60% capacity utilization during August and September, and then we'll scale up progressively. That's the plan.
So last question relating to what we see that there is an EPR rule which is coming, which is for collecting the tire in the domestic market. So first of all, what is the status on that? Means is that website has been launched or not? And second thing, are we setting up any waste tire collection centers or something like that to expand that business?
Sure, sir. No, it's a great question. I'm glad you asked. If you may recall, when the EPR was notified back in July 22, in fact, we, contrary to everyone's sentiment, we underplayed the relevance of that from a timing perspective. Because, all things relating to government sometimes takes more time than we anticipate. And, that is what has happened. We are now 1 year since EPR was notified and the policy is not yet operationalized. However, now I do feel that we are not far. I believe that before the end of this calendar year, we will start seeing impact of this EPR policy. In regards to your specific question on the website and portal, it is ready. Some testing is happening to see that it works properly. So as soon as the government feels that it is now stable, they will open and make it operationalized. So that is where we are at on the portal.
And sir, to understand it better, we import a lot of waste tire, and I think the domestic collection is not so great for the industry itself, not only for you. So what could be the process, means in future, how it will play out, how the collection process will improve, and how the tire company will comply in that way?
See, EPR has very clearly put the onus on tire companies that they have to be responsible for their waste. That is what EPR means. And I believe that the rules that are being put in place will ensure compliance by tire companies. And that will lead to diversion of these tires into organized economy, to organized players, to material recyclers like us, versus today, where a lot of these tires are going for possibly polluting applications like burning in brick kilns, etc. So that is the impact we are anxiously waiting for, and the rules, I believe, are sufficiently tight to ensure compliance.
Yeah, okay, that is correct. The tire company will be responsible, but will we be playing any role in that of collecting tire or no, or it will be just we will be getting it from tire company only?
We are actively discussing with tire companies, sir, and we are happy to accept any particular role that they may have in mind for us, whereby we can reduce maybe their burden. We are happy to be involved because there are enough global examples of efficient tire collection and management, and we are very happy to play a role in it, especially if it adds value to our business and to our profitability.
So last question, if you don't mind. This 60,000 ton capacity, which is comparatively larger capacity, is this targeted to looking at this EPR rule and all?
Very much so, sir. It is on account of 3-4 primary things. One is EPR. Second is we have mentioned in our earnings presentation also how we have seen doubling of sale of our products into the consumer sector. The consumer sector products and the infra sector products are very easily, we can manufacture them from using PCR as a base. Therefore, we are motivated to set up this PCR recycling plant, and the TBR rubber that we recover, we will largely use it for catering it to the industrial sector and maybe to the infrastructure sector, but for consumer sector products, even PCR, rubber recovered from PCR is also suitable. So, and we are seeing very good response from that market. And that is our motivation to set up this capacity.
Great, sir. Thank you very much and all the best, sir.
Thank you, sir.
Thank you. Next question is from the line of Samita Mohta from Credent Infridge. Please go ahead.
Sir, can you hear me?
Ma'am, your voice is coming a little feeble.
Okay. So basically, sir, I wanted to ask that you have divided your revenue into 4 streams, right? Infrastructure, industrial, steel, and consumers. So I just wanted to know that going ahead in the infrastructure and the industrial sector, because of the ongoing election year, do you see order book from the government rising? Because basically I feel this infra orders are from the government, right?
Yes, infra order is basically, the awarding of the road projects comes from the government side, but there are many projects which have already been awarded and our product is being used at the end of the project when it is nearly completion. My product goes right on the top layer of the road. So I don't think the election year and all these things will impact, because this will impact only to the, the new award, new contracts which are in pipeline. Till the time they are awarded, then it's the issue. But whatever they have awarded, that has to go on because the funds, etc., everything is already allocated.
Oh, okay. So can you say about the future infra and industrial sector projects? How do you see it going forward for next year?
Yeah, very much like, there are already 25 to 30 big expressways are planned, which are coming on the stage of, the top layer resurfacing. You might have heard, even in the state of Uttar Pradesh, there are many special projects are coming up, and, the Ganga Expressway is also one of them, which is also their target completion is FY2024, which will further extend to 6 months. But yes, there are many projects, expressway, 2 lane to 4 lane, 4 lane to 6 lane, and almost all the states, the work is happening at full pace.
So have you heard from them for your orders?
Sorry?
So have you heard from those players asking you for the for your products?
Yeah, very much. We have a strong pipeline at least for the next 2 to 3 years. I mean, considering whatever the projects have already been awarded, and at this stage, that will come in the phases when the top layer work will start. So, we are very, very confident on that.
Okay. And can you define the margin, sir, that the infrastructure sector in the industrial sector gives you a higher margin compared to the consumer sector, or is it the consumer sector which is giving you a better margin compared to infra and industrial?
And there is a, the basket of products. When we talk about the infrastructure sector or industrial sector, there are various products in the industrial sector which are low margin, which are high margin also. Similar way in the infrastructure also we have the product like, the trading, I covered 1 to 2% margin kind of stuff. And we have a crumb rubber modifier which goes to the Indian Oil Corporation. That's a high margin product. So we always consider our gross EBITDA across all the sector to maintain,
So as you had got this IOC order, so what percentage of your entire order book can you say for the next year would be IOC?
See, the 107 crore is the worth of contract is given to us to be completed in the next 2 years. So we hope around 80 to 90% quantity will be consumed within this financial year.
Okay, 80 to 90%. Great. And sir, about your Oman. So in your Oman sector, sir, is it for the raw material basis? Will you see, because you had said that you will see, cost reduction. So will it be for the product basis cost reduction or RM basis cost reduction?
So Oman, this is Gaurav Sekhri, ma'am. Oman, the reason and our motivation to set up a plant there was to capture the waste tires at origin itself and recycle them. And when we do that, obviously it comes at a lower cost. Cost of manufacturing in Oman, to our assessment, is more or less at par to India. and now we have a sufficient export base as well for our products, and that is expanding fast. So the logic and our approach was to cater to some of those markets directly from Oman, as a result delivering a better margin. And I hope that is how it will pan out. We will hopefully see that happening in the next 2 quarters.
So are you seeing virtually order book coming to you from the Oman facility as you had anticipated?
Absolutely, ma'am. We already have a sufficient export base, like I said, so that option remains for us. But parallelly, we are also working with government of Oman to implement use of rubber in roads. And if that happens, then we can use local tires, process it locally, and even have a market locally. And that would be the most ultimate way to run the Oman facility.
Great. Thank you. That will be all, sir.
Thank you. Next question is from the line of Rahul Dhruv from Pegasus Growth Capital. Please go ahead.
Yeah, hi. My question was on your on your investments that you have outside of the gross block, as in the non-current investments, which is around 25 or 27 crores odd. Can you explain those investments?
Sir, we have discussed this in our earlier earning calls as well. Essentially, these are investments which we consider non-core, and we are looking out for an opportunity to exit them, hopefully even contributing something to the company in the bottom line. But the intention of the management is to exit them because we do not consider them core to our business.
Can you just explain what exactly they are? And I'm sorry, I've attended the call for the first time, that's why I'm asking. The BKG and the Indo Enterprise and the Puja Infratech, all those investments, Kriti International. So I just wanted to know what exactly they are in.
These are essentially either land owning assets, or they are shareholding in companies which own some real estate. So this is what we are looking to exit, sir.
Okay. And what was the objective behind the investments?
See, when they were made, at that point of time, we saw them to be good opportunities to be able to get a good return, for our shareholders. But as time has passed, it is, we are very clear that these are not core to our business, and even if they may be attractive, we would like to exit them and convert this asset base into cash and use it in our core business.
Okay. Just one thing, on this question itself. So you come to the company, and I saw there's some trading activity also there. I'm just asking, is the company still open to investing in non-core businesses, as in like this land or for that matter, even the trading activity that you do? Are you just focused only? Are you focused only on the rubber business over here, or are you planning to do other things as well in this balance sheet?
In Tinna Rubber, our focus is only our rubber business, tire recycling business, possibly go upstream or downstream, but the central theme will remain recycling of waste tires and rubber.
Okay, great. Just an extension of that. What do you expect to get out of the sale of these investments, approximately?
It is difficult to say, sir. I would not want to speculate a number at this stage.
Okay. And on the capex, the 38 to 40 crores for the plant and Oman and the other plant, we are basically looking at around 50 crores or 45 crores of investments. And how do you plan to fund them?
So we are in the midst of taking a new term loan of approximately 30 crores to help us with these capital expenditures, and the rest will come from internal accruals. The Oman investment that we've done so far of approximately 11 odd crores has completely come from internal accruals.
Okay. Thank you so much.
You're welcome.
Thank you. Next question is from the line of Jigar Shah from AK Securities. Please go ahead.
Hello.
Yeah, go ahead, please.
Yes, sir. Congratulations on a good set of numbers. Sir, I have a couple of questions. Sir, what would be the crumb rubber sales to tire industry versus road sector? And the second is that, is there any proposed entry? Is the proposed entry in composite business based on any technical tie-up?
So, the total Q1 results, so we have highlighted the total top line of around 81 crores. So that is approximately 49% has gone to the infrastructure sector, around 28% has gone to the industrial sector, 16% is the steel sector, and 7% to the consumer sector. This is the sector-wise bifurcation of our top line.
Yeah, correct. On the second part, is the proposed entry based or in the composite business based on any technical tie-up?
On the TPE, the thermoplastic elastomers, we are in active discussions with some specialists from Europe to help us with the product development. The machinery we have already finalized. On the product development side, we are in active conversation. But what has been very helpful in us to explore this opportunity is that the company about 20 years ago was in the business of thermoplastic rubber compounds. So we have a fair bit of experience in-house in injection molding and the behavior of thermoplastic rubbers. So we believe we have the necessary knowledge and experience to get into this business.
Got it, sir. Thank you. That's all from my side.
Thank you.
Thank you. Next question is from the line of Viraj, individual investor. Please go ahead.
Hi, sir. Very interesting company, following it only recently. Regarding all your new investments you're making in greenfield expansions, including the acquisition of the Oman facility, what would the net asset turnover be on these investments at full scale? So what kind of sales can you derive from these all these platforms put together?
So the sales projections we have given, and I can share them with you again. So annualized sale out of the Varle facility, which is for PCRs, will be approximately 100 crores.
Right.
The sale from the thermoplastic elastomer business on an annualized basis will be approximately 30 crores. And the Oman facility is expected to contribute around 18 to 20 crores.
It's about 150 crores, so roughly 50% higher than your 23 revenues.
Yes, that's right.
Right. Understood. And can you give us a sense of how the business model works vis-a-vis collecting rubber tires currently in the domestic market, and why the export markets prefer to send tires back to India for recycling? Is there a specific reason why they're not recycled in their local environments, vis-a-vis the shipping and the freight costs and collection, etc.?
Sure. So, India has, a high level of industrialization. So we give you a classic example of Oman, where we have chosen to set up a plant. Until we set up the plant, we were picking up tires from Oman and bringing them to India for processing here. Now, Oman is a, fairly large country in landmass, low population, hardly any rail infrastructure. So all transportation happens by vehicles. They also have a very stringent rules for replacement of tires. So they have a high generation of waste tires, very little industrialization. So, for them, there is no option really. It's only to keep putting them in landfills or putting them in the desert and just stockpiling them, which is what was happening for all these years.
Right.
So this is one example, and there are many such countries. You also, Australia is another example. It's a continent with about 22 million people. And very high generation of waste tires, not much industrialization, so they don't know what to do with them. As a result, in order to save their environment, not to put these tires in landfills, they offer these tires to us where they can come and be recycled in a responsible manner. So we worked out a closed loop for such countries where we give them accountability of, how these tires are being processed. And they feel much better that these tires are coming here, materials are being recovered, rather than those tires going in their landfill.
Appreciate it, sir. So in that case, given the environmentally friendly nature of what you are doing in terms of circular economy, are you able to source these raw materials at a massively discounted cost, or are they free? Do they just hand over these tires to you and get rid of them for me in a responsible manner?
Each country is a bit different. There are some countries where we have very attractive terms because they simply do not have other options. And in some other geographies, we end up paying for these tires. But what matters to us is our least cost option on a landed India basis. And that is how we take our decision on which geographies to, promote.
Understood. But typically your RM as a percent of sales would be sub 10%? Sub 15%?
No, it is a bit high. I believe, Chhabraji, what is it? RM percentage of sales? Yes. 40.
So it is as high as 40. Okay, so you're paying a fair amount for sourcing the old rubber tires.
Yeah.
Right. And then on top of that, you'd have your freight costs, obviously, which would be to your account.
No, this 40% is worked out on the basis of landed to our factory, so it includes everything.
Right. Okay, that makes sense. Okay. Excellent, sir. All the very best. We'll be watching your company carefully.
Thank you for your interest.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question. Next question is from the line of Anirban Manna, individual investor. Please go ahead.
Yeah, thank you, sir, for a good set of numbers and rewarding the shareholders with the bonus. My first question would be regarding the rest of the year. So how you can see yourself in terms of some ballpark number for rest of 9 months, in terms of sales and in terms of EBITDA?
So, sir, we had given some guidance on this in our earlier calls. We are expecting to grow in the financial year by about 20%. We had given a guidance of our EBITDA margins improving to around 15%. We are at 14.5% already in Q1. I believe that this should be maintained. So to answer your question, we are looking at top line growth of around 20%, and we are looking at achieving EBITDA margins of around 15%.
Great. And after successfully launching the Oman production, so is there any plan to operate in any other country in near term or in mid term?
So we are always looking at opportunities, but I believe we are going to wait at least for this financial year to see through the projects we have already taken on hand, and they are quite substantial in our view, before we decide to go into a new geography.
Great. All the very best. Thank you.
Thank you.
Thank you. Next follow-up question is from the line of Smita Mohta from Credit Info. Please go ahead.
Yes, sir, just a follow-on question. I would like to ask you that at the current juncture, for your India orders, the raw material that you are sourcing, as you currently said to one of the participants, that it has your freight expenses, freight charges and all. So are you going to get the raw material from the Oman also for India, as majority of rubber tires are imported because it is sufficiently not available in India? So will that not make your cost go up, or are you thinking for Oman facility to cater to the other international geographies which will not increase your cost?
So, ma'am, with Oman, we have created a lot of optionality for us, and that is how we wish to approach, the business. It is possible that Oman may process the tires, recover the rubber, and export it directly to a third country. It is also possible now for us to take a base crumb rubber powder from Oman into our India facility, depending on the demand and supply situation here in India. It is also very much possible that we may still bring in some shredded tires or cut tires from Oman for our facility in India if we can get even more tires in Oman than what we can process there. So the idea of the Oman facility is to create all this optionality for the group and for the company, and we will be dictated by whatever delivers us the best margins.
So currently for India processing of orders, how much, what percentage of your RM do you have to import into India?
Out of our current processing in India, our raw material imports are in the ratio of around 60 odd percent.
Okay. But then can we see this, your raw material as a percentage of sales decreasing anytime in next 3 to 5 years with your Oman facility being brought up and you catering to many other geographies which will increase your volume but not increase your capex for the plant as you've already done it?
Ma'am, again, I've not fully, I couldn't hear you properly. Your voice is a bit feeble, but my answer is that how Oman will work in relation to India will be dictated by the where and how do we get the best margins. So that is what will determine our decision.
I was asking, sir, that whether the percentage of the cost of sales, your raw material as a percentage, is it expected to go down anytime soon in next 5 years?
No, I think we are operating quite efficiently on that parameter. Already we have 15 to 18 geographies from which we have the option to bring tires into India, and we pick the least cost option. So I don't believe any material change to that at this stage.
Okay, got it. Thank you, sir. That's all from my side.
Thank you. Next question is from the line of Viraj, individual investor. Please go ahead.
Hi, sir. I'm back. Question regarding your working capital. What is your current working capital days?
Sir, I'm Ravi Chabla, CFO. To answer your question, we are having working capital line from bank for about 33 crores, sir.
So that's not my question, sir. I'm saying what is your number of working capital days? Inventory days plus receivable days less payable days.
Okay. So our debtors days are about 45 days, 1.5 months.
Right.
And, average and inventory also it is about 45 to 60 days, sir.
Right. And payable days?
Payable days are, sir, about 2 to 3 weeks, because since we buy scrap tire, which is low value item, and mostly these are purchased in advance, and so our creditors days are 2 to 3 weeks.
Understood. So your total working capital days is about 60 in the business.
You can say more.
Right. My next question is regarding the current funding program which the other caller had asked. You're going to be taking some term loans and some through internal accruals, and then you have these land parcels that you're looking to monetize. So can we safely say within FY25, so not the current financial year but the next financial year, monetizing these land parcels, you would be a debt-free business and in a position to invest more for expansion?
Yeah, hi, Gaurav here. It is certainly we are striving towards that, and had we not done these current expansions, which of course were compelling, and we've done it, we would have achieved a debt-free status in any case. But at this point, for us, growth is of
growth is more compelling, absolutely.
Yeah, so that is, and we are very comfortable with the debt ratios that we have now.
Excellent. Any particular geographies you are considering in the overseas markets where you think there's a compelling raw material availability at a cheap price and a sort of local economy where you can source it and recycle it like Oman? Or you just want to do Oman for now and you think India has enough of business?
Well, we are already operating in about 15 different countries for originating, waste tires. And all of them, we are developing a high degree of knowledge of how they function, how they operate, and if any of them would be suitable for us to possibly set up a similar operation there as we have done in Oman. They are all good options, but I think we will first take a breather. We will stabilize Oman and only consider an overseas expansion now, certainly not before FY25.
Makes sense. That makes a lot of sense. Last question is, who is your competition, sir, in the Indian market? And are there a lot of Chinese or other players in the Asian markets that do this?
So firstly, our business model, we have now learned, we are very unique, not just in India, but at a global scale. We are the only company which is processing tires and using the materials so actively in the infrastructure sector as well as the consumer and the industrial sector. There are people we compete with, but they are in one of these sectors. There are tire recyclers who are catering to the industrial sector and possibly consumer sector, but not to the infrastructure sector, and vice versa. So we are quite unique in that respect. We haven't come across any business globally which has such a diversified customer base as us. Certainly not in India.
Understood. And in India, do you have a lot of sort of organized competitors who meet the sort of regulatory requirements as these new regulations come into effect? Or are you among a handful?
Yeah, no, there are some good credible operators. GRP is one, LG Rubber is another. Both are listed, and there are a few others who are privately held. These are all good businesses. But like I said, they are either regional in nature or they are not in all the sectors that we are present. So having a pan-India presence and being in all sectors, we are the only company in the country.
Understood. Thank you very much. All the best.
Thank you.
Thank you. Participants, you may press star and 1 to ask the question. Next question is from the line of Sujay Ghosh, individual investor. Please go ahead.
Yes, sir. First of all, thanks for the very good detailed presentation. You have given all the relevant details. So now in Q2 and towards the end of Q1, we have been hearing a lot of rainfall wreaking havoc across many parts of India. So how will that affect our business in this quarter?
So, hi, this is Subodh here. So, especially for the road sector business, rainfall is, not appreciated, and that's the reason if you see the rainfall in this FY24, it's actually an early monsoon which started almost from 15th June onwards. So that has made some dent of approximately the 2 weeks early. So, but the monsoon season, if you see the historically also it is the same for us, and we have the much larger experience because of the last past years. So that's okay. So peak season basically for the road infrastructure business is October, November, December, and then February to July. So it's actually in infrastructure business, the whole business is for the 9 to 10 months. Not more than that. So we are quite confident that this recovery will come in the Q3 and Q4, whatever we are losing on account of Q2.
Okay, so on an overall basis, there won't be any impact in the annual revenue numbers.
Yeah.
Okay, sir, and you have listed out 4 business segments. So if one were to ask, like going ahead, what would be your key focus or key growth drivers, or you expect decent 20-25% kind of growth from all these revenue streams?
So our focus is almost, all the sector is the same, and that's the reason we are diversifying and not only processing now TBR. In the time to come, we shall be processing the passenger car radial also. That's the addition to our business. So that's where we see the, the opportunity and across all the sector what we are catering to.
Okay, sir. And sir, earlier you had mentioned that when you started this ELT business, so you had to work at a bit lower margins because you were gaining market and you were gaining the credibility from the various OEMs. So will the same cycle repeat in this PCR business also?
No, not like that. So when especially in the industrial selling, where we are catering to the tire and the rubber conveyor industry, so then it is a process. Like, you know, you start with the trials and lab trials and the field trials. So getting into the entry with the tire companies and all, it's a process of around 1 to 2 years, and sometime, you know, it may take more than 3 years also. So in India, I mean, you name the brand, we are working with them. Now we are eyeing on the exports, and that's where, you know, we have started multinational tire companies business. So again, it's a process, like I said, so it will grow with the time. It's not like, you know, you start today and you build something from tomorrow onward. It's a process, especially in the industrial selling. But in the infrastructure, in the consumer sector, it's not like that. So that's where, you know, we also are witnessing growth in the last, past 3 years.
Sir, and you mentioned there are 25-30 expressways coming up for construction. So let's say over a 3-4 year period, can we look at 25-20% kind of volume growth CAGR?
See, the volume growth, you know, it's not like all the expresses are coming at that level simultaneously. So it will be the phase manner. So, so we, whatever the business plan we make for the year, it's always in the phases. But we know there is a great potential, and we see a strong pipeline of business for the infrastructure sector for at least next 3 years.
So any number you would like to share?
Consolidated growth, what we are eyeing approx 20% on year-to-year basis. So that much we are focusing on.
All right, sir. Thanks, sir, and all the best.
Thank you.
Thank you. Next follow-up question is from the line of Prachi Sharma from Ace Capital Partners. Please go ahead.
Hi, sir. I just have a couple of questions on the international operations. So are the international operations for import to India, or does the company have sales in those markets?
Sorry, what was the last part of your question? I couldn't hear you.
Or does the company have sales in those markets?
From where we pick up tires, you mean?
Yeah.
In some geographies, yes, but not in all of them.
Okay, understood. And just on the same lines, I just wanted to know that are the international operations focused on like the road sector or the reclaimed rubber?
At the moment, we can only speak of Oman, ma'am. And in Oman, we do not intend to set up a reclaimed rubber plant. We have set up a crumbling plant and a plant to make MRP.
Okay, understood, sir. Thank you, sir. That's all from my end. Thank you.
Thank you.
Thank you. A reminder to all the participants, you may press star and 1 to ask a question. Ladies and gentlemen, you may press star and 1 to ask a question. As there are no further questions, I now hand the conference over to the management for closing comments.
Thank you to all the participants for the interest you have shown in our earnings call, and to Valorem for organizing it. If you have any further questions or would like to know more information about us, please reach out to our investor relations managers at Valorem. Thank you very much again, and have a wonderful day.
Thank you very much. On behalf of Tinna Rubber and Infrastructure Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.
Please subscribe and press the bell icon to never miss another update. Please like, share and comment.